Hello guys, Assalamualaikum. Again, we are coming to the remaining portion of our leverage funding discussion. So leverage funding is related to the uh, use of leverage money to make loan for conventional banking and to make murabaha or tawaruq under Islamic banking. So as I say earlier that when the leverage money is used to make zero risk loan, that would be government bond or government treasury, then then the bank is subjected to the leverage ratio of 3%. While if the bank uses the leverage money to make a risky loan, which is mortgages, car loan, personal loan, credit card. So this risky loan will, bring danger to the deposit if there are default or losses arising from the exposure. So the regulator require more upkeeping of capital, and that will be through the capital adequacy ratio of 10.5%. So the bank now will have to hold a lot more capital against the risky loan. The other impact would be when the Islamic bank uses leverage money to make murabaha or to make tawaruq, then we will see that the risk in the deposit, such as withdrawal risk, will have to be now carried by the bank. So if we have the like of Silicon Valley Bank or Northern Rock Bank, where there is a sudden withdrawals leading to a bank run, then the bank, we have seen that they went into trouble because they don't have the liquidity to support the withdrawals, and they became insolvent. But later on, there was a bailout. But that would take a lot of damages because a lot of taxpayers' money were used in order to bail out this bank. So we do not want the Islamic bank to fall into this kind of, situation. So it is very important to see what will be the implication of using leverage funds in Islamic banking. And as we know that Islamic banks are using leverage money to make murabaha and to make tawaruq. And we can look at the banking report, the sources of fund. So these are the kardu deposit, these are the savings deposit under kardu. And then for fixed or term deposit, then the bank offers tawaruq deposits, right? So, and in some places, they are still using what they are damanah deposits, but as long as the bank have labeled their funding as deposit, automatically the Basel system recognizes this funding as loan supplied by the depositors to the bank. All right, and it will come together with the implication that the bank, when this funding are labeled as deposit, then the Basel Accord require the bank to honor any withdrawals on demand, and at the same time must guarantee full redemption of the deposit at maturity. So this seems to be making the Islamic deposit like the riba deposit or conventional deposit, and the public, public coming from consumer group, they will come in to criticize or to say that this Islamic deposit are in fact similar to the fixed deposit loan with fixed interest or fixed return as found in the conventional bank. And so the Islamic bank need to come and provide an honest answer to this criticism. Otherwise, the Islamic bank will lose their reputation as Sharia compliant banking system. So as I say, Islamic Bank cannot avoid the Basel III capital regulation when they label their sources of fund as deposit drawn under the contract of wadi'ah damana, qardu, tawaruq, and mudarabah, in the sense that when they label their funding as deposit, then the Basel Accord require this bank, number one, to guarantee full deposit redemption at maturity and the withdrawal of this deposit on demand. At the same time, the bank are required to hold, adequate capital against this so-called Islamic deposit. And at the same time, we know that the deposit to entice the Islamic depositor to come to put their money with the bank, so that motivation will come from the profit from the deposit. And Islamic banks have been labeling this profit as hibah if the deposit is contracted under the contract of qardu and wadi'ah damana, and the deposit will also be accorded with profit or dividend under the pretext of mudarabah, profit sharing investment account. So meaning that this PSIA is still a deposit, given the fact that the alpha factor, is still at 1% or lower than 1%. So meaning that in the IVSB jurisdiction, we can see that mudarabah, PSIA investment account, they are also deposit when the alpha factor is more than 0. And of course, when it comes to tawaruq deposit, as I say earlier, that the Islamic Bank have shamelessly gave away fixed contracted profit on the tawaruq deposit placement, just like any riba deposit. And they argue that this is okay, this is Sharia compliant, because the tawaruq deposit is not based on a loan contract. It is not a qardu contract, but this is a sale contract. But yet, as I have argued in my previous videos, that in the tawaruq deposit, the bank have coerced to some extent to offer, to use only one price for the buying and selling of the CPO in order to facilitate the objective of the tawaruq deposit. So again, the Islamic Bank should be able to clear this matter to the public in order to save face, yeah. And as also I have mentioned earlier, that when the bank declare their funding sources as deposit, and then using this deposit fund or leverage money to make murabaha or to make tawaruq, then the risk in this tawaruq and murabaha will be absorbed or will be carried by the Islamic Bank, because they are using leverage money like any conventional bank are doing. And so any credit risk, market risk, liquidity risk, faced by the bank under the use of murabaha and tawaruq asset will be carried by the Islamic Bank. So that is one big issue that I will try to clarify later on in the final video. But at the same time, we must be able to see, that the Islamic deposit system, apart from the fact that the bank now, is holding credit market and liquidity risk and operational risk. At the same time, we will see that the Islamic deposit system have shifted this so-called withdrawal risk to the Islamic Bank. not only that Islamic bank will be facing credit market and liquidity risk or Sharia non-compliant risk, but at the same time, the Islamic bank now will have to hold the withdrawal risk, because this deposit system, or the so-called Islamic deposit system, have shifted withdrawal risk to the Islamic bank, while the depositors enjoy some degree of capital protection with fixed return without holding any risk. So this is the so-called the paradox here. The Islamic deposits are Islamic, but at the same time, there is no risk-taking in the Islamic deposit, despite that this depositor receive, fixed profit from the bank, apart from getting back their full deposit placement as guaranteed in the tawaruq contract. So we can see that so this is essentially the predicament in Islamic banking, because they are adopting the leverage funding model of conventional bank, and they are not serious enough to migrate into the investment account banking system, where credit market risk will be, liquidity risk, business risk will be carried by the investment account holder. And this is how we can see a brighter future for the Islamic bank, because the blue ocean is open to them when they operated well based on the investment account system, instead of the prevailing deposit funding system, where banks have to somehow be responsible for all of the risk carried in their asset portfolio. Okay guys, we can stop here, and then I'll see you again in the final video. Thank you. Assalamualaikum warahmatullah.